Do you feel there are any risks after the PSI?
There are always risks. I think what's important now is that the Greek government build on the momentum they have created. The current government and I would say the prior government deserve huge credit for having come to face with the difficult imbalances and distortions in the Greek economy. This has been painful, and the pain is not over yet, but I now can see light at the end of the tunnel for the Greek economy, and I think that if this government and any successor government will build on the momentum, then I think the risk for Greece and the risk for the Eurozone will be very manageable. This is going to lift a big cloud off the backs, off the horizon of the Greek economy, and a burden off the backs of the Greek people.
So do you think that the risk of default is behind us now?
Oh, yes. I mean, I think we are in a technical default phase here. Once the deal clears the marketplace, there will be new evaluations of the Greek economy. This is a huge and unprecedentedly large debt reduction. And in one moment, probably sometime Monday evening, Greek time, a magnitude of debt equal to half of the Greek GDP almost will be eliminated, cleaned off the slate. And this, to me, is going to present a very outstanding opportunity for Greece to move forward. And I do not see, with performance on their part, I do not see a high prospect of future debt problems. They are on a path now for rebuilding access to global capital markets. And once that happens, then the whole dynamics will change. They're on a path to new credit availability. The Greek banks, who have suffered a great deal through this, will be recapitalized through a combination of private and public equity, and this will give a new momentum to the Greek economy as well.
Do you think that Greece could have access to the markets before 2020?
Oh, yes. Oh, yes. I think that it's highly probable that if Greece sustains its economic program, that it can renew access within a few years. You know, look back only to the summer and the early fall of 2010. It was only 18 months ago, although it may seem like ages ago, but the spreads on Greek debt in secondary debt markets came down steadily. They declined over 300 basis points. This was a sign that Greece was rebuilding credibility. Unfortunately, European leaders at that point decided that they wanted to signal that in the future investors might have haircuts, and this threw a real cloud of uncertainty over private investors in European sovereign debt, especially countries such as Greece, where there were negotiated programs. So I have little doubt that with the restoration of confidence, that with the clearing of this debt, with the strong support coming out of the Eurozone, and if the Greek commitments are fulfilled, if privatization goes forward, if some closed sectors of the economy are liberalized and opened up, if continued pension reform and continued reduction in the size of the state sector, that Greece can restore access to public capital markets, to the open capital markets within a matter of a few years.